All right, everybody. Welcome to another deep dive. It seems like everywhere you turn these days, somebody's talking about cryptocurrency.
It's definitely a hot topic.
Yeah, so we asked you guys to send us some source material that you wanted us to kind of dig into. And this one in particular looks pretty fascinating. This PDF called Trading Cryptocurrency Advanced Trading Strategies.
Yeah, it looks like it covers a lot of ground.
It does. It goes from the basics, like what even is cryptocurrency, to some pretty sophisticated trading strategies. So we figured this would be a good one to really take a deep dive into and see what kind of insights we can uncover.
Sounds good to me.
So before we get ahead of ourselves and start talking about moving averages and Bollinger Bands and all that fancy stuff, let's just take a step back and answer the most basic question. What is cryptocurrency?
Well, at its core, it's a form of digital money.
Okay, so it's like digital cash. But what makes it different from, say, like using Venmo or PayPal or even just transferring money online through your bank?
That's where the blockchain comes in.
The blockchain. I feel like that's like the buzzword of the century.
It is, but it's also the technology that makes cryptocurrency truly unique.
Okay, so explain it to me like I'm 5. What is the blockchain?
Imagine a giant digital ledger that's public and distributed across a network of computers.
Okay, I'm picturing like a huge spreadsheet that everybody can see.
Exactly. And every time somebody makes a transaction with cryptocurrency, it gets recorded on this ledger. And it's not just one copy. It's copied across the entire network.
So it's like a public record of every single transaction. That seems pretty transparent.
It is. And that transparency is actually what makes cryptocurrency so secure. It's virtually impossible to counterfeit because every transaction is verified and permanently recorded.
Okay, so that makes sense. But I'm still a little fuzzy on the whole mining thing. I always picture like little guys with pickaxes digging up digital gold or something.
Yeah, it's a common misconception. Mining actually involves powerful computers solving complex mathematical problems to add new transactions to the blockchain.
So they're basically crunching numbers all day long.
Pretty much.
Yeah.
And as a reward for their work, they get cryptocurrency.
So it's like a race to solve these problems, and whoever gets there first gets the prize.
You got it. And that process of solving these problems is what helps secure the blockchain and keep it running smoothly.
Okay, I think I'm starting to get the hang of this. So we've got this secure, transparent system with miners constantly working to keep it running. But I've also heard about these things called forks, which sound kind of like a fork in the road. What's that all about?
You got it. A fork is basically when a cryptocurrency splits into two separate versions.
Why would that happen?
Well, sometimes there are disagreements within the community about the future direction of the currency.
Like what kind of disagreements?
It could be about things like transaction speed or security or even the underlying technology itself. And when those disagreements can't be resolved, a fork might happen.
So it's like a divorce in the crypto world.
Yeah, kind of.
Yeah.
The source material actually gave an example of this happening with Bitcoin. It's folked several times already.
Oh, yeah, like Bitcoin Cash. I remember reading about that. So one cryptocurrency can literally become two separate currencies.
Exactly. It's all part of the decentralized nature of cryptocurrency, which can be both a strength and a challenge.
Okay, that's fascinating.
Yeah.
So let's talk about the most famous cryptocurrency of them all, Bitcoin. It's kind of like the OG of the crypto world, right?
Absolutely. Bitcoin is the original cryptocurrency, the one that started it all back in 2009.
And it still dominates the market, right?
It does. It's the biggest cryptocurrency by market cap. So yeah, it's kind of the 800-pound gorilla in the room.
And it has this whole mysterious origin story too, right?
Absolutely. The creator, Satoshi Nakamoto, is still a complete unknown.
Like nobody knows who this person is.
Nope. It could be one person, a group of people, or even an AI. Nobody knows for sure.
Wow, that's crazy. So this mysterious Satoshi creates Bitcoin, and it goes from being worth basically nothing to being worth thousands of dollars today.
Yeah.
Can't even imagine what that ride must have been like for the early adopters.
Yeah, it's been quite a journey. Bitcoin's value has been incredibly volatile over the years, with massive price swings both up and down.
I remember the PDF mentioned something about Bitcoin's transparency being both a blessing and a curse. Can you elaborate on that a little?
Sure. On the one hand, that transparency is what makes it so secure. Every transaction is out in the open for everyone to see. But on the other hand, it also makes it a target for hackers. If they can figure out a way to exploit a vulnerability in the system, they can potentially steal a lot of Bitcoin.
So instead of a double-edged sword.
Exactly. There's always a trade-off. The source also talked about the process of buying Bitcoin and this thing called KYC, or Know Your Customer.
Oh, yeah. I've heard that term before. What's that all about?
KYC is basically a set of regulations that require exchanges to verify the identity of their users.
So it's like showing your ID when you buy alcohol or cigarettes.
Pretty much, it's all about preventing money laundering and other illegal activities.
So it adds an extra layer of legitimacy to the cryptocurrency world.
Exactly. It's all part of the industry's efforts to become more mainstream and regulated.
Okay, so that's Bitcoin.
hmm
But there are tons of other cryptocurrencies out there, right? I mean, the Bitcoin's not the only game in town.
Oh, definitely not. In fact, there are thousands of other cryptocurrencies out there.
Thousands.
Yeah, each with its own unique features and purpose.
So what do you call all these other cryptocurrencies?
Those are called altcoins, short for alternative coins. And the landscape is constantly changing, with new altcoins popping up all the time.
Wow, so it's like a whole universe of digital currencies out there. It's kind of overwhelming to think about.
It can be. But our source material actually focuses on a handful of key altcoins that are worth knowing about.
Like which ones?
Well, they highlight Ethereum, Ripple Dash, NEO, and Litecoin. Those are some of the biggest and most established altcoins in the market.
Okay, so let's dive into those a little deeper. What's so special about Ethereum?
Well, what's cool about Ethereum is that it's more than just a digital currency. It's a platform that allows developers to build what are called decentralized applications, or dApps.
Decentralized apps. Okay, I'm intrigued. What are those?
Think of it like apps that aren't controlled by any single company or entity. They run on a distributed network like the blockchain, which makes them more resistant to censorship and downtime.
So it's like taking the power away from the big tech companies and giving it back to the people.
That's the general idea. And Ethereum also has this really cool feature called smart contracts.
Smart contracts.
Yeah.
Okay, now you're just showing off. What are those?
Imagine a contract that automatically executes itself when certain conditions are met. No lawyers, no middlemen, just code that does what it's supposed to do.
Wow, that's incredible. It's like the future of agreements and contracts, right? So much potential for efficiency and transparency.
Absolutely. And Ethereum has been at the forefront of this smart contract revolution.
So it's like the innovator, the trailblazer in the crypto world.
You could say that, but it hasn't always been smooth sailing for Ethereum. Remember that massive hack called the DAO?
Oh, yeah, I remember hearing about that. Wasn't that a major setback for Ethereum?
It was a defining moment in its history. The DAO was a decentralized, autonomous organization that was built on the Ethereum platform, and it got hacked for millions of dollars worth of Ether.
Wow, that's a lot of digital cash.
Yeah.
So what happened after that?
Well, the Ethereum community was faced with a tough decision. Do they reverse the hack and bail out the DAO, or do they stick to the principle of immutability, which means that transactions on the blockchain are permanent and can't be reversed?
So it was a dilemma between doing what seemed fair and upholding the core principles of the technology.
Exactly. And ultimately, the community decided to fork Ethereum, creating a new version of the blockchain where the hack never happened. The original chain continued as Ethereum Classic.
Wow, so one cryptocurrency became two because of a difference of opinion on how to handle a crisis.
That's right. It was a pivotal moment that really highlighted the decentralized nature of cryptocurrency and the power of community governance.
Okay, so that's Ethereum, smart contracts, decentralized apps, and a whole lot of drama. What about Ripple? What's its claim to fame?
Ripple is taking a different approach. Instead of trying to disrupt the traditional financial system, it's actually aiming to work within it.
So it's playing nice with the big banks.
Exactly. Ripple is focused on providing fast and cheap cross-border payments for financial institutions.
That makes sense. International wire transfers can be such a pain, both slow and expensive. So Ripple's trying to streamline that process.
That's the goal, and it's already being used by some major banks around the world.
Okay, Ripple, the bank-friendly cryptocurrency. Got it. Now what about Dash? I remember you mentioning something about an accidental instamin earlier.
Right, Dash had a rather unique and controversial start. When it was first launched, a bug in the code allowed a significant portion of the total Dash supply to be mined very quickly.
So it's like a gold rush where somebody struck it rich right out of the gate.
That's one way to put it. This event, which became known as the Instamine, created a lot of controversy within the Dash community, with some arguing that it gave early miners an unfair advantage.
So how did Dash overcome this initial setback?
Well, Dash has some unique features that set it apart from other cryptocurrencies. It has a two-tier network with regular miners and then these special nodes called master nodes.
Masternode sounds kind of like something out of Star Wars. What do they do?
Master nodes perform special functions on the network, like validating transactions, enabling features like instant send and private send. And they also get to vote on proposals that govern the development of Dash.
So it's like a decentralized democracy where masternode holders have a say in the direction of the currency.
That's a great way to think about it. Dash puts a lot of emphasis on community governance and empowering its users.
Interesting. Okay, two down, two to go. What about Neo? I think you called it China's Ethereum earlier.
Right. NEO is often compared to Ethereum because it also supports smart contracts and dApps. But it has a few key differences that make it more appealing to large institutions and businesses.
So it's like the enterprise-grade version of Ethereum.
You could say that NEO is designed to be regulatory friendly and compatible with existing business systems.
Okay, NEO, the business-focused blockchain platform. Got it. And last but not least, we have Litecoin. What's its story?
Litecoin is often referred to as the silver to Bitcoin's gold. It was created as a faster and more lightweight version of Bitcoin.
Faster. How much faster are we talking about?
Well, the source mentions an example of a transaction that was sent from Switzerland to the US using Litecoin, and it took less than a second to confirm.
Wow, that's practically instantaneous. Compared to traditional banking systems, that's lightning fast.
Exactly. Litecoin speed and low transaction fees make it an attractive alternative for everyday payments.
Okay, so we've covered Bitcoin and 5 major altcoins: Ethereum, Ripple Dash, NEO, and Litecoin. That's a lot to process.
Yeah.
It seems like each one has its own unique strengths and weaknesses, and they're all trying to solve different problems of the financial world.
Absolutely. The world of cryptocurrency is incredibly diverse and constantly evolving.
It's a bit overwhelming, to be honest. I can definitely see why people get so fascinated by this space.
It's a rabbit hole, but a very exciting one. And we're just getting started with our deep dive.
All right, bring on the rabbit hole. But before we jump into the more technical stuff, let's take a quick break. When we come back, we'll explore the essential tools of the trade wallets and exchanges. Don't go anywhere.
Looking forward to it.
All right, welcome back. So we've talked about all these different types of cryptocurrency, but before we actually start buying and selling it, we need to figure out how to store it securely. Right.
Exactly. And that's where cryptocurrency wallets come in.
Okay, so when I hear the word wallet, I'm picturing like a physical wallet. Like, do I need to go out and buy some special crypto wallet?
Not quite. A cryptocurrency wallet is actually a piece of software that stores your private keys.
Private keys. Those sound important.
They are. Your private keys are basically like the passwords to your crypto assets. They give you access to your funds and allow you to make transactions.
So the wallet itself doesn't actually hold the cryptocurrency?
Nope. Your cryptocurrency is stored on the blockchain. Remember that giant digital ledger we talked about earlier?
Right, right. So the wallet just holds the keys that unlock your access to it. Okay, that makes sense. So what kinds of wallets are out there?
Well, there are several types, each with its own pros and cons. The source material mentions software wallets, hardware wallets, and paper wallets.
Okay, software wallets, I feel like that's probably the most common type.
Software wallets are apps that you can install on your computer or smartphone. They're easy to use and readily accessible, which makes them popular for everyday transactions.
What about hardware wallets? Those sound a bit more serious.
Hardware wallets are physical devices that store your private keys offline.
Offline. So they're not connected to the internet.
Exactly. And that makes them incredibly secure because they're not vulnerable to hacking attempts that target online systems.
So if you're holding like a significant amount of cryptocurrency, a hardware wallet is probably the way to go.
It's generally considered the safest option, especially if you're holding a lot of crypto.
And then there are paper wallets. I'm picturing like literally printing my private keys on a piece of paper.
That's essentially what it is. A paper wallet is basically a printout of your private keys, often in the form of QR codes.
So it's a very low-tech way to store your crypto offline.
It is, but it also comes with its own risks.
Like what?
Well, if you lose that piece of paper or if it gets damaged, you've lost access to your cryptocurrency. There's no way to recover it.
Yikes. Okay, that sounds a little too risky for me. I think I'll stick with a software or hardware wallet.
Yeah, probably a good idea for most people. The source actually provides some specific wallet recommendations, which is helpful.
Oh, that's awesome. So which wallets do they recommend?
For software wallets, they mention Bread and Mycelium.
Okay, I've heard of those. What are they known for?
Bread is known for being super simple and easy to use, and Mycelium is popular among Android users, and it offers a higher level of security.
So those are good options if you're looking for a software wallet. What about hardware wallets?
They recommend Trezor and Ledger Nano S.
Okay, and what are their strengths?
Trezor is widely considered to be one of the most secure hardware wallets out there, And Ledger Nano S is another popular choice that strikes a good balance between security and affordability.
Okay, cool. So let's say I've got my wallet set up, my private keys are safely stored, and I'm ready to buy some crypto. Where do I go to do that?
That's where exchanges come in. Exchanges are online platforms where you can buy, sell, and trade cryptocurrencies.
So they're kind of like the stock markets of the crypto world?
Yeah, that's a good analogy. Just like you would use a brokerage account to buy and sell stocks, you use an exchange to buy and sell cryptocurrencies.
Are all exchanges created equal, though?
Not at all. They can vary a lot in terms of reputation, security fees, and the cryptocurrencies they offer.
So how do you choose the right exchange?
Well, the source material outlines some key factors to consider, like trading volume fees, security measures, user experience, and customer support.
So it's important to do your research before you just jump into any exchange.
Absolutely. You want to make sure you're choosing an exchange that you trust and that meets your specific needs.
The source mentioned a few popular exchanges. Did any of those stand out to you?
Yeah, they highlighted Shapeshift, Coinbase, Poloniex, and Kraken.
Okay, let's break those down a bit. What's special about Shapeshift?
Shapeshift is known for its speed and simplicity. It allows you to quickly swap one cryptocurrency for another without having to create an account.
So it's like the express lane of crypto trading. What about Coinbase?
Coinbase is one of the most popular and user-friendly exchanges out there. It's a good option for beginners. It offers a wide range of cryptocurrencies, has strong security measures, and is relatively easy to navigate.
Okay, Coinbase, user-friendly and secure. Got it. What about Poloniex?
Poloniex is a more advanced exchange that caters to more experienced traders. It offers a wider selection of cryptocurrencies, more advanced trading features, and higher trading volume.
So that's for the serious crypto traders who know what they're doing.
Exactly. If you're just starting out, Coinbase is probably a better choice. But if you're looking for more advanced trading options, Poloniex is worth exploring.
And lastly, we have Kraken.
Ah.
This is claim to fame.
Kraken is known for its robust security measures and its high trading volume. It's a reputable exchange that's been around for a while and is trusted by a lot of experienced traders.
Okay, cool. So now we've got a good overview of wallets and exchanges.
Yeah.
I feel much more prepared to actually start buying and selling cryptocurrency.
That's great. But remember, the journey doesn't end there. This PDF we're exploring really delves into the art of technical trading, which is all about analyzing charts, identifying patterns, and making predictions about future price movements.
Okay, technical trading charts and patterns. This is where it starts to get a little intimidating for me.
I know it can seem daunting at first, but trust me, it's incredibly fascinating. And once you start to understand the basics, it can be a really powerful tool for navigating the cryptocurrency markets.
All right, you've piqued my curiosity. Let's dive into the world of technical trading. Okay, so we've talked about cryptocurrency, we've talked about wallets, we've talked about exchanges, but this PDF we're deep diving into goes even deeper into this whole world of technical trading.
Yeah, a lot of people think that trading is all about, luck or intuition or just kind of like a gambler's mentality.
Right, just throwing darts at a board.
Exactly. But technical trading is actually a very disciplined approach. It's all about using data and analysis to make informed decisions.
Okay, so it's not about gambling. It's about being more like a detective.
Yeah, that's a great way to put it. Technical traders are like detectives of the financial markets. They're looking for clues and patterns and signals that can help them predict future price movements.
Okay, I like that analogy. But I gotta be honest, charts always kind of freak me out. They just seem so complex and confusing.
I get it. They can definitely be intimidating at first. But like anything else, the more you learn about them, the more comfortable you'll become.
So where do we even begin? Like, what's the first step in learning how to read these charts?
Well, the source material starts with a really important concept called support and resistance.
Support and resistance.
Okay.
Imagine a price chart as a battlefield between buyers and sellers.
Okay, I'm picturing like a tug of war.
Perfect. So support is the price level where buyers tend to step in and push the price back up.
So it's like a floor that the price bounces off of. Exactly. And then resistance is the opposite. It's the price level where sellers tend to step in and push the price back down.
Like a ceiling that the price can't break through.
Right. So prices tend to move within these zones of support and resistance. And sometimes the price breaks through support or resistance, which can signal a change in momentum.
Okay, that makes sense. What about trend lines? Those seem pretty straightforward. Do you just draw a line connecting a series of higher lows or lower highs?
Right. Yeah, that's the basic idea. Trend lines help you visualize the overall direction of the price movement.
So if the trend line is going up, the price is generally moving up. And if it's going down, the price is generally moving down.
Exactly. And when the price breaks through a trend line, that can be a signal of a potential trend reversal.
Okay, so support resistance trend lines. I'm starting to get the hang of this. But what about all those fancy indicators I always hear about? Like moving averages and MACD and all that stuff.
Those are really useful tools that can give you additional insights into price movements.
Okay, so break it down for me. What's a moving average?
A moving average basically smooths out price data over a certain period of time.
So it helps you see the bigger picture and not get caught up in the day-to-day fluctuations.
Exactly. And then there's MACD, which stands for Moving Average Convergence Divergence.
Okay, that sounds complicated.
It can be, but essentially it helps you identify changes in momentum.
So it can give you a heads up that a trend might be about to reverse.
Right. The source material also talks about chart patterns, which are formations that appear on price charts and can signal potential future price movements.
Oh yeah, like head and shoulders and triple top. I've heard those terms thrown around before.
Yeah, those are classic chart patterns. And once you learn to recognize them, they can be really valuable trading tools.
So what's the head and shoulders pattern all about?
It's a bearish reversal pattern that often signals the end of an uptrend.
So like a warning sign that the party's over.
You could say that. And then the triple top pattern is another bearish reversal pattern that forms when the price hits the same resistance level 3 times and fails to break through.
It's like the price is hitting its head against the wall.
Exactly. And these patterns are based on the psychology of traders and how they react to certain price levels.
So it's like you're trying to understand the crowd mentality of the market.
Right. And the source material highlights several other patterns like gaps and saucers and the T30.
Wow. There's a whole language of chart patterns to learn.
There is, but it's a language that can really pay off if you take the time to learn it.
Okay, so we've covered a lot of ground here. Support resistance, trend lines, indicators, chart patterns. But there's one more thing I wanted to ask you about. The source material mentioned something called derivatives, which sounded kind of scary.
Yeah, derivatives can be a little complex, but essentially they're financial instruments that derive their value from an underlying asset, like a stock or a commodity, or in this case, a cryptocurrency.
So it's like a bet on the future price of something.
That's a good way to think about it. One type of derivative that the source material focuses on is options.
Options. Okay, I've heard that term before, but I'm not really sure what it means.
An option gives the holder the right, but not the obligation to buy or sell an asset at a specific price on or before a certain date.
So it's like having a reservation at a restaurant.
Yeah.
You can choose to show up, but you don't have to.
Exactly. And options can be used for a variety of different trading strategies.
Okay, so that's a lot to take in. I feel like I've learned a whole new language. The language of cryptocurrency.
It is a lot, but
Yeah.
the more you learn about it, the more fascinating it becomes.
And this PDF we've been deep diving into has given us a really solid foundation to build on.
Absolutely. It's a great starting point for anyone who wants to learn more about cryptocurrency and how to trade it.
So what's the one key takeaway you want our listeners to remember from this deep dive?
I think the most important thing to remember is that knowledge is power in this space. The more you understand about the technology, the market dynamics, and the various trading strategies, the better equipped you'll be to make informed decisions and potentially profit from this exciting and ever-evolving market.
Well said. And remember, folks, this is just the beginning of your crypto journey.
Yep.
There's a whole universe of information out there waiting to be discovered. So keep learning, keep exploring, and keep asking questions.
Exactly. The world of cryptocurrency is full of possibilities, and those who are curious and willing to learn will be the ones who thrive in this space.
That's a great note to end on. Thank you for joining us on this deep dive into the world of cryptocurrency. We hope you found it informative and inspiring. Until next time, happy trading.